Hi, this is Ian Coleman, and this is this week's video analysis for the dollar index and FX majors going into the week 11th February 2019. I'm going to start off with the dollar index and break down into all the other currency pairs, highlighting what formations we're seeing at the moment. So starting off with the dollar index, we've had quite an aggressive move back up to the upside. We've got an ABCD formation target at 96.80, which is basically the top of this what looks like at the moment a corrective channel formation. The moves in both directions have been quite impulsive as sentiment changes in the majors. If we break this level, then we're going to see a morning doji star formation, and we could well see a move back up towards 98, the figure. So quite critical at the beginning of the week to see if we can break that ABCD formation target. This signal or this candle formation is normally a lot stronger, say at the bottom of a trend, than sort of mid-trend. So, you know, we've got a bit of a 50-50 play really on at the moment. Euro dollar, we're still holding on to our long trade. We're long at 113, the figure. Whether or not we hold on for much longer, we have got the stop to entry. A full ABCD formation takes a pair down to here, 112.38. We could even spike below that previous low if the dollar index continues this rally, and then we'll probably form a reverse head and shoulders. So this being the left shoulder, this spike through being the head, and then move back up to form some sort of neckline. At the moment, the bias, or at least the intraday bias, is still to the downside. If we look to this time frame, we've got a 261.8% extension level at 112.88. To the upside, the only resistance we've really got at the beginning of the week is 113.91. So a fair way away from current price action. Sterling dollar, nothing really happened on Friday with the B of E. There's two formations here. One of them sort of flipped us a little bit. This is an expanding wedge formation. We got the breakout to the upside. The measured move target is 133, the figure. It didn't rally up to that level, stalled short. It's now looking like we might form a reverse head and shoulders again. So left shoulder, head, this being the neckline, and then probably some choppy corrective free wave patterns. Remember, the first wave is normally impulsive. The corrective wave is normally choppy, mixed, volatile trading, and in free waves to the downside. We've got right shoulder support coming in around about 127.70. I have highlighted this level here because we're just consolidating around that reverse trendline support. To the upside, a level to note this week is 131, the figure. So AB, BC, CD is potentially what we're looking at. If it breaks through this level, then obviously we're looking at 133, the figure. So again, pretty mixed, pretty volatile trading in the currency pairs, with this dollar not really showing strength in one direction or the other at the moment. Dollar Swiss weekly chart, we've got a wedge formation. There's nothing to say that we're not going to rally higher. The wedge top is at 101.60. The eventual bias is to break to the downside. Measured move target, if we do, is 91.80, which is down here. We're still holding some divergence, but we really need to see how far this dollar Swiss rally can extend to. If we go to a shorter time frame, potential for a 5-wave move, 1, 2, 3, 4, and then up in 5. Is this a 5th wave? You know, really longer term, we're looking to sell this pair. Shorter term, I think we've still got to be looking at buying dips. We've still got higher highs, we've still got higher lows. Support this week is at 99.29, which is pretty close to this previous swing high. Been quite a pivotal area. If we get down to there, then we could see a head and shoulders pattern in the other direction, but at the moment it's far too early to tell. So buying into dips intraday, selling into rallies for that medium term, long term wedge play. Dollar yen, we're just consolidating. RSI is non-trending, just holding around the 50 level. We've had numerous days where we've basically been flat, 11 to 12 days of mixed trading. It does look like an ending wedge formation now. What we'd like to see is just a bit more of a corrective rally to the upside. We've got bespoke resistance at 110.25, and we've got trendline resistance at 110.30. A break of the support, which is at 109.05, and the measured move target's all the way down to 106.80. We'd have to see probably a decent turnaround in stocks as well to get that impulse move lower. Dollar CAD still holding on to our short. Really thought we were going to get a decent bleeder there, especially the scope of the initial sell-off. But oil's turned around, and so's this commodity currency pair. To the upside, we've got a Marabuzo level from last month that comes in at 133.85. If we go to this time frame, 133.75 is the previous swing high. 134.03 is a 423.6% Fibonacci extension level, which is quite common in commodity currencies. Expect price action to be mixed and volatile. Still really want to be selling into rallies in this commodity currency. Aussie dollar broke this wedge formation to the downside. Decent impulse move after the RBA. Measured move target is at 69.93. To the upside, we've got resistance this week at 71.75. We're still looking for this sort of mixed, choppy, contained price action really over the medium term between these two levels, 73.62, and this previous swing low around 70 the figure. So do expect price action to continue to be pretty unpredictable in Aussie dollar. Euro sterling, probably one of my favourite pairs to play at the moment if we get a further corrective rally. Over the long term, it's looking like quite a decent risk reward setup. We've broken the wedge formation to the downside. We've got a measured move target of around about 83 the figure. A reverse trendline resistance is located at 89.01. We've got a bearish outside month, often an indication that the downward trend is fresh and starting. If we go to this time frame, we've got a few factors here. We've got 89.01 is close to the 61.8% pullback level, which is 89.10. We've got our bespoke resistance at 88.51 now. We've got the 50% pullback level of this strong sell-off. Again, Elliott wave can be seen in 5 waves, 1, 2, 3, 4, 5. Like I said, 88.51 is our bespoke resistance. 88.54 is a 50% pullback level. We're in between bespoke support and resistance. So again, the moves higher are normally mixed, volatile, choppy. This could be AB down to BC and then up in CD. So potentially buying dips, but with caution, knowing that it's counter trend. Really wanting to see a rally up to this zone to get short in this cross. Euro yen, broken the wedge formation to the downside. Nothing really clear showing that this downward trend is going to come to an end. 124, let's just move it along. 65 is reverse trend line. Just looking at my other charts, 124.65 is bespoke resistance. Excuse me, and then 124.85. So only a small zone really for potential corrective rally by selling into next week. The measured move target is at 122.60. Okay, thanks guys. I hope you have a great week, and we'll speak to you again soon. Thank you.